Question is, as we asked at the very top, Josh, is this the week that sets stocks on a course for a new milestone or not?
It's very possible, and I want to be constructive here. So if you're looking at technicals, you would say, okay, for the first time since last September, you've now got 72% of the S&P 500 back above its 200-day, which means more than two-thirds of stocks, almost three-quarters, are in their own structural bull market. But again, that happened last September, and look what went on in October. So I don't know how forward-looking that is, although it certainly is a positive, especially when you consider the fact that we're getting participation from across the market. It's not very narrow. It's very broad. That being said, those junky retailers that had a monster move over the last couple of weeks higher, all of that is now falling apart, rolling over. The big energy boom that we saw yesterday, those stocks are now softening. So it's not as good as you'd want it to be. You've got maybe a viable pullback in the home builders. So you just look around the market and you say, all right, yes, we look good. Yes, we're very close to a new high. But some of the stuff that's gotten us here is now starting to back off. So I do want to be constructive. I do feel that, gun to my head, flip a coin, I think we get a new high. I just don't know how meaningful it'll be, absent strength in some of these key areas.
All right, so, Steph, it's been, Fed-induced, a large part that's gotten you knocking on the door of a new high, not that far away at all. Is this the week that pushes you over and beyond, or pulls you back because we didn't really get what we thought we were going to get come tomorrow?
Well, I want to just focus on the economic data because actually in the last week and a half, I feel a lot better. In terms of today, we got industrial production. We got good housing data. We've had great retail sales, consumer confidence. So those recession fears that we have all been talking about for the last month and a half go away, in my opinion.
Thank you, bond market, right? I mean,
yeah,
that's helped change the narrative a little bit.
Yeah.
Right?
Yeah.
But yields have gone up.
Right. But I mean, we were really thinking recession was coming in the next 6 months. And now I think you're looking at like 2% growth. Not booming, not 3% growth, but 2%. And that's just fine, given where interest rates are and given where valuations are. So, yeah, maybe we could see new highs. The question I have, the bigger question, does this rotation continue? We've had growth into value for the last month. Does that continue? I actually think you need a 3% economy for that to continue to work. So maybe, to Josh's point, we rotate back into some of the secular growing names over time. You know what?
It's an interesting point of view because, there was a Reuters story on a survey of value fund managers. Even they don't think it's going to last.
No. Well, because we've been beaten up a lot. Yeah,
and they've said, how many times have I heard that before? Right? There's going to be this run into value stocks, Pete, and it hasn't materialized for any great length of time.
It doesn't sustain. It's a
blip.
It happens,
because of why they're going there, right? I mean, why are they going there? Because they're looking for a safe place, not necessarily hide, but a safer place. But I think when you're talking about the speed of the rotations that we're seeing in the market, Scott, I mean, that's the amazing thing right now. Take a look at oil yesterday on this huge spike to the upside, and now we're getting a pretty significant move back onto the downside now, about off, I think, somewhere close to 5%. So, yeah, this is the market we've been in all year. 2019 has been this incredible rotation that has gone with velocity at all times, moving from one area to the next to the next. I think the one area that you can always stick with is, even though we've seen somewhat of a pullback when you talk about growth, sometimes over value, I look to these growth stocks because there are so many of them that still give you value with the growth, with great management, with a dividend yield and a low PE. I mean, so there's a lot of different ways to dissect what we talk about when we talk about growth. I'm not talking about those with the 200 PEs. I'm talking about the names that just continue to work to the upside with slight pullbacks here and there, whether that's Apple, whether that's Microsoft, whether that's Intel. There's all kinds of different areas of the market right now that continue to be the place to be, I think, going forward.
All right, Bryn.
I agree also, and I think you have to think about the growth and value. I mean, we've had this discussion for decades.
We had it yesterday again, right? Dubravko was saying that from Dubravko Lakos, JP Morgan was saying there's going to be a more meaningful move from growth into value.
But I think if you look like individual sectors like financials, which are in the value sector.
Energy.
But I think with financials specifically, that gets tough to get multiple expansion if rates are going to consistently go down over the next year and a half. And I also think within momentum, when you look at the individual names, is MasterCard and Visa a momentum name or a financial name? They're both. And Momentum and MasterCard have been doing really well. But I do think for investors need to really understand that tomorrow, after the Fed raises or or lowers rate. It's going to be about managing expectations, and I'm quite sure the algorithms are going to dissect every single word that Jay Powell says, and markets will react accordingly. And so I think tomorrow is really important for investors just to be patient and sit through and don't try to trade around the words that the algorithms are going to instantly do, because that's how investors get whipsawed.